This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, as we said at the end of our previous session, life from now on gets rather more interesting as we deal with savings income. Now, savings income, as we know, is interest income, and that is always received gross. You might not, again, think there's any other choice there, but years ago, banks and building societies used to deduct income tax at source, as employers still do. And they used to deduct it, though, at just a set rate, basic rate in point of fact. It doesn't happen anymore. Now, as far as our syllabus is concerned, all of our sources of interest income are received gross. They will include, as we've just mentioned, interest from banks, building societies, a term that we used previously, I think back in the first session there, financial institutions like banks, but they are there for one main purpose, and that is to lend money to individuals for the purchase of property. What we may also see is government securities and corporate bonds, corporate loan stock there, things like debenture interest, but loan stock interest. Watch out, as we said earlier, for exempt sources of interest. Remember, we had the National Savings and Investment Certificate interest. That was exempt. We may see here National Savings and Investment Account interest or investment account interest. Only the certificates is the exempt income, not the account interest. Might also have interest from an ISA. That too is exempt. Simple basis of assessment. We look at the actual amounts received in the tax year. Again, what they may do in a question is to give you different dates when the taxpayer received their interest income, and you have to then prepare the income tax computation for our tax year, 2017-18, but you want only the figures received in that tax year, between the 6th of April 17 and the 5th of April 18. So we don't work on an accruals basis here in income tax on interest income. It is purely a question of what was received. So watch out for that. Often all they do is to tell you an interest received figure. You pick it up, you put it into your computation. It's very simple. Right. Taxable interest received is included in the savings income column, as we know, on our computation. Any deductions in our income tax computation, deductions from total income like qualifying loan interest, eventually personal allowance from net income, are, for purposes of this exam, deducted firstly from non-savings income, then savings income, then dividend income. Hence the order in which we place our analysis columns. Now, as I said there, for purposes of this exam, if anybody is watching this as a prelude to their P6, they will see in P6 that there may be a different order. It will always be non-savings income first of all, but there may be a situation where in fact you might apply any excess personal allowance to your dividend rather than your savings income. I repeat, that is not the case in this, our Tax UK, our F6 examination there. Here, that is the order. Non-savings, savings and dividend income there. So non-savings income is then treated as the first slice of taxable income, and we've seen in that previous example how to tax that taxable income there with our basic rate, higher rate, if necessary, additional rate. It's then followed by savings income, and finally, if necessary, by dividend income. The total of that tax is the tax liability, and as we then saw, we would deduct any PAYE to bring us down, if required, to tax payable there. So our different types of taxable income have these differing tax rates, based to begin with, of course, on the amount of income you had. A reminder, your non-savings, basic rate, higher rate, additional rate. The band limits, 33,500, your basic rate band limit or higher rate threshold. And then for higher rate, the higher rate band limit, 150,000. Thereafter, we go to additional rate. those bands, that information as you see it there, will be provided to you, again, on your rates and allowances page. And again, for when we come to them very soon, make sure you've got your rates and allowances, at least those sections, available to you. Now the new bit, the taxability of the savings income. Now we say here, not wishing to build this up too much, that this is rather more complicated than it used to be. Since 1617 tax year, so we've now of course got to use that in 1718, we've got the introduction of a nil rate band. That's very good news, of course, a nil rate band. We'd all like to be paying tax at a nil rate. So it's taxable, so it's not like a personal allowance that exempts income. This is a rate of taxation on your taxable income, but it's a very pleasant nil rate. But what is that nil rate band? Again, this information will be provided on your rates and allowances pages. But that is £1,000 if you are a basic rate taxpayer, falling to £500 for higher rate taxpayers, and additional rate taxpayers do not benefit at all from the savings income nil rate band. So given the level of taxable income that we have, by comparison to your basic rate band limit, you'll be able to determine, to begin with, do you get £1,000 or do you get £500 as your savings income nil rate band? But if you're over £150,000 in taxable income, you don't get any. The savings income nil rate band counts towards the basic rate and higher rate thresholds there. The higher rate band limit, I should say, and the higher rate band limit. They count towards that. We include that in terms of calculating the amount of income that is chargeable to the different rates, as we'll see in a moment's time. So it's included. It's a part of your £33,500. It's a part of your overall £150,000. Now, before those nil rate bands came in for savings income, what we'd had for some years prior to that was another, again very present, a nil rate, a 0% starting rate of tax that applied to savings income. However, it only is available if the taxable savings income falls within the first £5,000 of your total taxable income. Right, let's just repeat that. Only available if the taxable savings income falls within the first £5,000 of your total taxable income. Now remember, to get your taxable income, we need you to deduct your personal allowance. That, for us, a basic figure of £11,500 for our tax year. Now, when we've taken that away, we deduct it firstly from non-savings income. If your non-savings income is £16,500 or more, I'll tell you why I've used that figure in a moment. If your non-savings income is £16,500 or more, it means that this 0% starting rate will not apply. Because when you take from £16,500 or more as your non-savings income, a figure of £11,500 worth of personal allowance, that will leave you with at least £5,000. And what that means is, if the first £5,000 of your taxable income is all non-savings income, then no part of your savings income falls within the first 5,000 of your total taxable income. So only if your non-savings taxable income, i.e. after deducting the personal allowance, only if your non-savings taxable income is less than £5,000 will the 0% starting rate band apply. Now, there's a lot of words coming at you there in different numbers, different figures. We'll see in our calculations in a moment's time how this works, so don't panic, we'll be practicing that. Now, to begin with, therefore, we'd have thought, great, when we look at savings income, we're actually going to have the same rates as for non-savings, because savings income is taxed using the same rates as non-savings income listed above, the 20, the 40, the 45, by reference to those rate bands. But we've got the starting rate of tax of 0%, applying to a maximum 5,000 of the taxable savings income, where any part of the taxable savings income falls within the first £5,000 of the total taxable income. If we said, if therefore the first 5,000 of taxable income consists of non-savings income, then the 0% rate will simply not apply. It is irrelevant. If applicable, the starting rate is applied first to your taxable savings income. There are two zero rates here, your starting rate and your nil rate band, £1,000 for your higher rate taxpayer, £500 for your higher rate taxpayer. So we apply the starting rate first of all, followed by the savings income nil rate band, if available. Are you a basic or higher rate taxpayer? Is it £1,000 or is it £500? If you're additional rate, then of course there is no savings income nil rate band. And after you've checked out the availability of the 0% starting rate, followed by the nil rate band, only then do we look and see, so what band are we now in? Are we still in the basic rate band? I.e. we're not yet up to £33,500 of taxable income, in which case if it's still in the basic rate, 20%. If we go up into higher rate, 40%. If we go to the additional rate, 45%. Okay, now we'll come back and talk about dividends later, but we've got enough on our plates there just with the savings income. So let's move through. We'll come back, as I say, to the taxability of dividend income, to a few examples that now bring in this combination, at least to begin with, of both non-savings income and savings income here. Right, Billy had a trading profit of £26,500 and received bank deposit interest of £10,000 in 1718, and we want, again remember, which is it? It's income tax liability. It's only going to be income tax payable, in all honesty, where you have employment income. We don't have that here. We've got a self-employed taxpayer, Billy, who's got a trading profit. And of course, for our 1718 tax year. So we will now need to set up, you will now need to set up on a working page here, your income tax computation. Again, clearly, when you come to a section C question for some 15 marks on income tax, it's going to be rather more complicated than that. But to begin with, get used to the structure of it. So it's an income tax computation. Who is it for? It's Billy. What types of income do we have? Trading profit, that is non-savings. Bank deposit interest, that is savings income. So having read through, found out what information there is there, you now know the structure. You're going to have 3 columns, non-savings, savings and total income. Into the non-savings income column, you will get your trading profit of 26.5. Into your savings income, your bank deposit interest, 10,000. Both of those figures, of course, going into the total income column. What I want you to do is to set that up on your computation. You don't need me to show you how to do that. Get your total income figures. It will be the same as net income here because there are no deductions from total income to get to net income. There's no qualifying loan interest payments, and there's no loss reliefs to apply. So your total income will be your net income. You can label it just as net income there, that's fine. And then you need to deduct your personal allowance. Your personal allowance will go where? Firstly, from your non-savings. That is clearly bigger than £11,500 worth of personal allowance, so the personal allowance will be fully consumed by the non-savings income. And get your figures of taxable income. So I want you, therefore, if you just pause this now, to have, when you come back to the lecture, figures of taxable income in terms of non-savings, savings and total. And then we'll proceed to calculate the tax on that taxable income, starting of course firstly with non-savings, before then moving to your savings income. So again, if you just pause at this point, I'll just keep this running for a moment there while you do that, and then come back to me when you've got those figures. Okay, well, all being well, what you will have is your non-savings income. Remember that was, what was that, £26,500 less your personal allowance of 11.5. So that will bring you down to £15,000 of non-savings taxable income. The savings income, the bank deposit interest, was untouched by the personal allowance, that was 10, and therefore we've got £25,000 worth of taxable income in total, of which non-savings taxable income is 15,000. 15,000 is less than 33,500. Therefore, all of that non-savings income of 15,000 will be taxed at the basic rate band of 20%. And then we move to the more interesting one, our savings income. Now then, there were two possibilities of a 0% and nil rate applying. One, if the 0% starting rate was available to you. Is it going to be available here? Look at what you have. Your non-savings taxable income is £15,000. What does that mean? It means it exceeds £5,000. It means that this taxable savings income, none of that is within the first £5,000 of taxable income. The first 5,000, the first 15,000 of taxable income is non-savings. So that means there is no 0% starting rate band, unfortunately here, for us to be able to use. So having dismissed the availability of it, what do we do next? The savings income nil rate band. For that we need to know the level of taxpayer we are. Look at our total taxable income, £25,000. That does not exceed £33,500, your basic rate band limit. So the taxpayer, Billy, is a basic rate taxpayer, and on that basis gets a savings income nil rate band of £1,000. £1,000 of savings income nil rate band. So we've now taxed 1,000 out of the £10,000 of taxable savings income. So 1 out of 10 leaves £9,000 to be taxed at. You've gone through the 0% rates. There's no 0% starting rate available here, but there is a savings income nil rate band. What taxpayer are we now? All of that £9,000 that remains falls within the basic rate band limit, because our total is only 25, it does not exceed 33,500. So the 9,000 will be taxed at 20%. So you can do your tax calculations now and establish your tax liability. Again, that will be the same as the tax payable figure here, as there's no PAYE, there is no employment income, where tax would have been deducted at source. So work that through, then check that out, please, again with the model answer, before returning again to this, where we will then continue with example 3, where what you'll see we are doing is to increase our bank deposit interest up to 20,000. But for you, please, again, stall at this point in time, just pause that, and then come back to me in a moment's time. Okay. Hopefully, therefore, you agreed the answer with the model answer. Shouldn't have been too many problems there, I trust. And now what we've got to do is to redo our computation for Billy with this one change. And that is that your savings income has now gone up to 20,000. Now, can you think what difference that is going to make here by increasing it to 20,000? A moment ago, Billy was only a basic rate taxpayer. By now increasing from 10 to 20 his amount of savings income, it means that we're going to be up into higher rate band, just a little bit anyway. So again, what do? We've got trading income, that is non-savings. We've got bank deposit interest, that is savings. And we'll have our total column. We will therefore list out. We will include our trading income. We will include our bank deposit interest. What figures are they this time? Trading income 26,500 as before, and again into the total column, and the bank deposit interest this time £20,000 rather than a mere 10,000, and again into your total column. What does that give us therefore in terms of our total stroke net income here? 26,500, obviously, 20,000, 46,500. But of course we now get to deduct our personal allowance of £11,500. Is the non-savings income big enough to absorb all of that? Of course it is. Also, of course, deduct it from the total there. So revise to see what we get in the way of taxable income. As we had before, the non-savings, take the 11.5 and the 26.5, will be 15,000. As soon as you see you have taxable non-savings income of 15, that therefore is more than £5,000. What does that mean? As regards savings income, there'll be no starting rate band for you to use, no 0% starting rate. We've got £20,000 of taxable savings income, so in total 35,000. Just do a little calculation of that. Yeah, 46.5 less 11.5 is of course 35. So now we are in a position again to compute our tax. Again, the order, non-savings, that is the same, it's 15,000. 15,000, of course, all in the basic rate band. It'll all be charged at 20%. So what do we now do? We've now got £20,000 worth of savings income to charge to tax. There's no 0% starting rate. Reason being, that figure, 15,000, was bigger than £5,000. So no part of the taxable savings income falls within the first £5,000 of taxable income. After non-savings, it's savings. No 0% starting rate, as we said, but do we get a savings income nil rate band? We do, but how much will that be? The taxpayer look, 35,000. Ah, a higher rate taxpayer. That's more than 33,500, the basic rate band limit there. So on that basis, we will get a savings income nil rate band, but only £500. So 500 will be at 0%. And now, having accounted for 500 out of the 20,000, there's another 19,500 to be included. But how much basic rate band do we have available? We've got here 15,000 plus 500, 15,500, and we've got a 33,500 basic rate band limit. So do a little calculation, therefore. You'd show this in your workings if it was a Section C question. You just got to do it through your calculator. If it's an objective testing question, of course, there's no marks for your workings. So in which case, 33,500 basic rate band limit, minus what we've charged so far, the combination of those two, £15,500. That, therefore, would leave you with, what would that be, £18,000. So the next £18,000 of your taxable savings income will be at basic rate of 20%, your basic rate band. But when you add those up now, that's going to come to 33,500. Again, check through. But there's still some £1,500 of your £20,000 taxable savings income there that as yet we've not taxed. What we've got at the moment for savings income, 500 plus 18,000 is 18,500. So that still leaves £1,500. Hopefully you've got rather more room than I have here, and that will be taxed at 40%. That's the higher rate band relevant to any savings income falling within that tax rate band. So what I need you to do, again, just check through with the model answer at the back. Make sure you're happy with that calculation. You can obviously do the calculations here, work that through, agree with the answer. Then join us again next time, where we'll progress still through this savings income, still more to do here, where, of course, what we'll see is the introduction of that 0% starting rate band that we've seen has been inapplicable in these first two examples. When we completed our studies of the taxability of savings income, we'll then move on to deal with the taxability of dividend income. We look forward again to dealing with that with you next time.